go.
Awesome.
What is going on, everybody? Two Mortgage Guys team here.
Yes, we're going to address the elephant in the room. There are
There's three of us.
Yep, there we go.
But
So now
that's okay.
Now the elephant's left. So let's get down to business.
You're going to see two of us at one time, except on video.
Yeah. So in most cases, it'll be two. You'll be seeing Daniel. You'll be seeing Jonathan. And then you got myself in the back. Party in the back. But anyways, and the reason for that is because they're going to be going out. And the reason we are a team, real quick, is just to better suit the agents, the clients, just everybody else for better customer service. So Daniel, if you want to go ahead and elaborate on that.
A lot of what you see in our industry is very cutthroat, very me. And we want to get away from that tone and really focus more on the consumer. By doing that, you get a team. You get multiple guys available to answer your phone call, handle your file, keep the process moving quickly and efficiently for you. And that's why we work together. We're not competing with each other. We are making the best for you as the borrower and helping you get into your home as fast as you can.
Right. The other thing too is, a lot of people, they think, okay, if I'm going to call Jonathan, then I'm going to cut out Tyler and Daniel. And that's not the case whatsoever, because we all do get paid on every single file. So again, if you call Tyler, if you call Daniel, or if you call myself, you are getting that true team aspect. I think that's really important. A couple of people have asked us about that, so we just wanted to address that as well.
Yes.
So we just opened up a branch in November of 2018.
Yeah, so officially 6 months.
It's officially been 6 months. We're doing well. We're closing loans, and we're closing them quickly and having a lot of fun doing it.
It's definitely been a lot of fun. I know you've seen them out in the community more, also out at offices, for you agents. And we just love to get out and meet people. That's the other thing too, especially with technology, because that has made our lives a little more easier, more convenient, but it does lose that personal touch a little bit. So that's why we have this team all as well, to be able to get out there, to connect with you, the agent, with you, the consumer, be seen. And I don't think really there's anything better than that face-to-face interaction, or hearing our voice and just that. So we definitely want to try to keep that, I guess, if you want to say that's more old school, whatever that is, but we want to kind of tailor the best of the old school world and the new school world, 20th century, 21st century, and just have a best combination for that.
Right. At the end of the day, it's still a lot of money that you're trusting us to help you with, and we want that added trust factor of being face-to-face, something more personal than just sitting behind a screen. So although the convenience of technology is here and we love to utilize it, we also want that added touch to know you as a person, for you to know us as people, and we get to work together that way.
Yeah.
So one of the things I wanted to talk about too is some of the different programs that we're seeing in the Riverside County area, and especially coming from a lot of people buying in Orange County, San Diego County, LA. So we have a lot of different programs that we're able to help utilize. A lot of people are calling us to utilize to buy a higher sales price, especially in Riverside County. Temecula, we have $550 sales price, $600 sales price. We have one right now that's about $1.2 million just came in. And so a lot of our traditional types of financing, we can do a couple different things. Tyler, you want to elaborate on some of the stuff?
Yeah, so one program that we've seen a lot of success with, it's our 95% program. So what that does is it has two benefits, or actually three. One, it doesn't become a jumbo product because it's combining a first and a second, the second being a home equity line of credit. Two, you only have to put 5% down. So, $1 million home, instead of having to put $200,000 down, you're only putting $50,000 down, right? And then three, what that's doing is that because your first loan is 80% LTV, loan to value, that eliminates the mortgage insurance. So now that's going to save you hundreds of dollars a month, right? And that just goes straight to the bank, to the lending bank, because to insure for them, it's not even insurance for yourself. So
Correct.
That just gives it to where you can, have that few $100 extra a month to pay down principal more quicker, or just use it, go spend it on the family or something, whatever you want to do. But we've seen a lot of great success with that program. So there are some qualifying factors, but that's when you give us a call, we can help with your scenario on
Absolutely. Again, Daniel, kind of our newest member, but he's come along. He's super knowledgeable.
Very quick.
Reading the guidelines. Of course, we showed that with the new video that we're going to film too. But, Daniel, can you just kind of tell us what you've seen in the last couple months, especially with the fresh set of eyes, kind of what you've seen happening in our industry?
Yeah, I mean, so far as I've gotten to know the industry and kind of seen it from different eyes, you're seeing a lot pick up, especially in these last couple months, to where, when I first started, things were kind of slower, and now we're we're hopping. We're getting phone calls every day. I'm talking to more people that are looking, shopping, finding homes that they want. You're seeing constant activity and still competitive prices and rates, which is, it's that perfect marriage right now of, rates haven't jumped. Home prices are still reasonable for the area. So as I'm learning, like, it's just a perfect time to get into a home and start building equity.
Right.
Yeah.
And again, we're happy to have you on board.
Definitely.
I've been trying to poach him from the golf industry for years. Finally got him on board, so we're happy with that.
Yep.
So I want to talk a little bit more about the down payment assistance program.
Yeah.
Of course, we just recently
Super
had
helpful.
the HUD letter come out, Department of HUD, announcing a couple different changes within the industry.
Yes.
We are seeing the state programs becoming a little bit more compliant with that. We're hoping that they can continue to roll that out. But we've seen a lot of good traction from people that haven't been able to buy in the past because they think they got to put down 20%.
Yes.
So let's talk a little bit more about the down payment assistance program.
Yeah, so the down payment assistance program, so through the California Housing Finance Agency, so it is a California government assistant program. First off, it's not a grant, so you do have to pay it back at the end of the loan or when you refinance or sell the home. But that usually the equity covers that in the home, so that's not a big deal. But it is one program, though, that is very underutilized still and not understood very well. So that's one thing we've taken pride in really trying to just help borrowers get into little to no money out of pocket. And we've had some success definitely in the last 6 months with that. So with the lower rates, we see the government rates still in the 4s there, so which is amazing. But the thing is, like what he's mentioned with the HUD letter, is that it's talking about compliance from government assistance programs. They've extended the date to July 18th. So what that means for you borrowers is if you definitely are on the fence, get off the fence now, because as long as we get that going by July 18th and get the loan into the CalHFA, then you'll be fine. After that, we're still waiting for compliance. We still from the California government, we are still very confident that they're going to be able to comply because they have 3 extra months. So that's good there. So a couple things. So for you specifically in Riverside County, if your household income is under $128,000 a year, you have a chance to qualify. You're eligible. If you're a first-time home buyer, meaning if you haven't owned and lived in a home that you owned in the last 3 years. So if you own a home, say Northern California, and you have been living in Southern California for the last 3 years and you haven't lived in that home, you can still be a first-time home buyer through CalHFA, which is actually a little different than the normal first-time home buyer qualification or definition. And then there's a couple other factors like a 640 FICO score, and there's some other stuff, but that's where we want to help you because everybody's situation is different. And that's the thing with loans, right, that we see. It's that there's nothing cookie cutter, and we can't give you a definite answer because we want to make sure we get the right program for you, the best program for you, the one that's going to maximize your dollar.
And of course, a lot of people think that they have to come up with a large down payment to buy a house.
Right.
That's certainly not the case. So we're very excited about that program. That's one of the programs that we push a lot. I'm going to transition a little bit here. Debts. I know, Daniel, you've been doing a lot of different studies as far as stewardship, right? As far as like your credit worthiness and money. Can you talk about one of the things that you've been seeing as far as people's good stewardship? And maybe you own a home. Maybe it's time to look at consolidating some of that debt.
Yeah, I mean, there's a lot of avenues we could go down talking about how to manage debt or how to kind of put yourself in a good situation. But ultimately, it's staying on top of payments. Yeah. One of the biggest hits that's going to hold you up is having late delinquent payments on any sort of loan or revolving credit that you have. So do whatever you can to stay on top of payments, get caught up. A lot of people misunderstand how to use their credit cards. You don't have to stop using them. It's as simple as not maxing them out. Keep the percentage of how much, your credit limit. You want to stay, closer to 30% balance at most as you're spending and then be paying it back down. As soon as you start getting it, 50, 60, 70% of your credit limit, that's when you start getting dinged on your credit. So
good point.
Something simple there that, really, even if it means adding another credit card so that you don't have to spend so much, like that's going to be better for you than maxing out one card. Yeah. If you can just add a second one. But again, stay on top of your payments, do what you can to not fall behind and go from there. I mean, debts are going to get you in trouble. Student debts, we've seen
a lot of that right now.
They're out there. We know it's the second largest debt right now in the country, right behind the mortgage and with where we are. So in a nice way, and Jonathan or Tyler can clarify, you don't get penalized for them as much as you might think.
Yeah.
Mm-hmm.
So don't be scared to still see where you're at. If you have student debt, you might still be able to get into your home because that debt's not gonna hinder you as much as you might think.
Yeah,
right.
Exactly. Yeah, that's a good point. Kind of a good segue is don't hesitate to ask us
Right.
or any lender for that aspect if you are working with one currently. But
No, just us.
Yeah, just us, definitely. But I'm just saying, as a community, lenders and what we do, what we specialize in, we're not just loan officers. We like to call ourselves mortgage planners, right? Mm-hmm. So it's a multi-year relationship with you, the borrower, or even your agents, anybody like that, because we want to make sure that you're getting the right you're moving on the right process to get into the home or purchase another home if it's an investment, whatever it may be, and then after that, maximizing the equity for yourself to truly utilize it as an asset.
Exactly.
Because if you're buying and you're paying into it and you're not utilizing it, it's not an asset technically yet. Right. Even though people tend to say it is, but it's only an asset when you actually use the money. So that money being equity. So that's where we want to help you there each year with mortgage reviews, maybe seeing if a refi is a good adjustment, or maybe seeing if selling, getting another home, adding another home. I mean, there's so many scenarios, and we can tailor it to you. And we just we get really pumped to be able to help you all and and your families and just create that legacy and
that's
that wealth.
Something I'll jump back in on that since I've joined this team and this industry, the opportunity to be that mortgage planner more than just the guy that's getting money for you, being able to sit down with somebody and walk them through how to best facilitate this process and how to use it to maximize their standing in planning through, whether it's getting them on track with their credit repair, whether it's managing their payment, whether it's optimizing their payment on their loan and how quickly they're going to pay it down to save on interest. A lot of people don't pay attention to their payment and what they can do to make it work for them more than what it is and not get hit with hundreds of thousands of dollars of interest.
Right. Yeah. The other thing too, I mean, we just talked with the lady today. She has, she did her last loan in 2009. She's already paid on it for the last 10 years. But 30-year loan is kind of standard, but we still offer 15, 10-year, 20-year. Even looking at doing a brand new loan, she's paying 8%. And has done that for the last 10 years, even refinancing it to a 20% 20-year loan, keeping her term is going to save her $500-$600 a month.
Right.
So again, if you are on the fence, give us a call. There's a lot of different options. We do more of that mortgage planning. We're in it to earn your trust and build relationships with you. We are a very relational lender. Our past clients, we consider a lot of them our friends and keep in contact with them too.
Definitely.
So I think that's kind of the biggest thing. We'll go ahead and I think wrap up this segment.
Yeah.
But again, thank you very much, guys. Appreciate you tuning in, and give us a call for any questions.
Word.
Awesome.